Welcome and good afternoon to everyone. I'm very pleased to have you all here for this Swiss Malaysia Chamber of Commerce Economic Outlook 2021. I'm Michael Huttap and I'm the chairman of the SMCC. Impacted from the COVID-19 pandemic, like the global economy, the Malaysian economy contracted by 5.6%. The worst performance since 1998, the Asian financial crisis. Beside the COVID-19 pandemic, the local economy was also inflicted with some domestic challenges. While recovery is expected in 2021, supported by global growth in GDP and trade, deployment of vaccine plus stimulus measures, the risk of a rebound remains. The question now is whether the economy can potentially ensure sustainable growth post-recovery. Please stay tuned. Our today's keynote speaker will provide you with an outlook of the economic impact and the current situation in Southeast Asia in a few minutes. But before that, let me make a few other announcements first and introduce you to a few other important guests here. First of all, I'm very happy that we can have this event again together and with the support of CCI France Malaysia, the Malaysia French Chamber of Commerce and Industry, and La Camara, the Malaysia Spanish Chamber of Commerce and Industry. So may I please ask first Michel Lossac, the Managing Director of CCIFM, Malaysia French Chamber of Commerce and Industry, to provide us with a few welcome words. Michel.
Okay, merci, Michael. Thank you very much, Michael, for this short introduction. It's always a very good pleasure to participate to an event which is organized by the Swiss Malaysia Chamber of Commerce. We are very happy to be here with you and also with our Spanish colleagues. And when it comes to listen to Mr. Antonidas, with whom we have regular sessions, it's always even more enlightening. And the response for our members has been quite good on that matter. And we hope to learn something today about the perspective, to have a clearer picture compared to what we know from our side. I just would like to say that at the level of the Malaysian French Chamber of Commerce, what we see today is a constant interest for French companies in France about Malaysia. I think the perception of Malaysia in France is very good, especially when you look at the big picture about the way Malaysia is managing the pandemic, about the way the economy is moving. And we are overall quite confident about the result and the development of further French investment and more trade between France and Malaysia. Thank you very much again for the organization. Merci, Michael.
Merci, Michel. Thank you a lot. And now may I ask Jordi Paul, the chairman of La Camara, the Malaysia Spanish Chamber of Commerce and Industry, to give us his welcome note as well. Jordi, over to you.
Yeah, hola, Michael. Thank you very much again for having us. And it's again a pleasure participating to this webinar. This year in the form of webinar, the previous years, there was always a fantastic event together with Mr. Anthony. It's indeed a pleasure listening to him. And then again, also endorse what my colleague Michel was saying. I think Spanish companies are looking at Malaysia as a destination for investment. Today, I'm talking from the northern side of Malaysia, from Taiping, and I can see a lot of manufacturing of gloves in this part of Malaysia, which is going mainly to Europe. And this is definitely a flagship for the Malaysian industry to Europe. No? So I think to send the information to potential investors and also to our members on what's happening in Malaysia and what Anthony can tell us about 2021 is indeed very, very interesting. So thank you very much. We are very pleased to participate with you guys and looking forward to listening to you all.
Thank you, Jordi. Thank you again, Michel, for your support. It's always a pleasure to have these events with you. Furthermore, I'm also very happy that the Embassy of Switzerland is supporting us for this event. So before we are going to hear about the situation in Southeast Asia, let's hear from our Deputy Head of Mission of the Embassy of Switzerland in Malaysia, Werner Bardil about the overview of the economic situation in Switzerland and the bilateral trade with Malaysia. Werner, I think this is now for you. Welcome, and thanks for your support. Can we have the slides for Werner?
Thank you very much, Michael. It's always a pleasure to attend this event organized with 3 Chamber of Commerce here in Malaysia. It's my 3rd time that I'm participating, and I'm glad to be part of it again today. Thank you very much. I hope you can hear me. Thank you for this opportunity to give a short overview of the economic situation in Switzerland. I'm standing in for Ambassador Andrea Reichlin today. She's absent right now, and it's my pleasure to give you a short overview. Next slide, please. So in the Corona year 2020, Switzerland experienced the most severe economic slump since the oil crisis of 1975. The GDP fell by 2.9%. The economic development resembled a roller coaster ride with a historically deep slump of almost 9% in the first half of the year, followed by an impressive recovery of 7.6% in the summer, and then in the final quarter, the recovery more or less came to a halt. According to real-time data of the first quarter 2021, Switzerland is likely to have come through the new lockdown that has been imposed beginning of this year, relatively unscathed so far. Nevertheless, the new lockdown will weigh on the Swiss economy in the first quarter. According to current forecasts, GDP is likely to decline by 1 to 2%. In view of the high degree of uncertainty, the Swiss government has complemented a group of experts to forecast 2021 and 2022, represented by the red dots in the graphic with 2 supplement scenarios. In scenario 1, the blue dots take into account a combination of positive developments, and scenario 2, the yellow dots, reflect various additional risks. The experts expect growth of GDP of 3% in 2021 and 3.3% for 2022. This projection is based on the expectation that the epidemiological situation will gradually stabilize from spring 2021 onward through the widespread use of vaccines. During the course of the year, a sufficient high immunization of the population could be achieved, and containment measures are gradually relaxed. In addition, monetary and fiscal policies are expected to remain expansionary and continue to support the economy. But no doubt, the pandemic continues to set the tone. The economic trend slipped back into negative territory in the first quarter. Some observers have therefore revised their forecasts downwards. The renowned KOF Swiss Economic Institute of the ETH Zurich is expecting a growth of approximately 2% for the whole year, and no longer of 3.2% as projected by them end of 2020. So a much lower growth than the experts of the government. The risk that the recovery will be delayed has increased in recent weeks, but the chances are intact that the economy will return to some degree of normality towards the summer and start a strong upward trend. Let me quickly give you a short information on unemployment rate. 2021 is expected to rise slightly to 3.3% before falling back to 3.0% next year. Inflation is expected at 0.4% for 21 and 22. Next slide, please. When we look at the total bilateral trade between Switzerland and the ASEAN countries, including precious metals, Malaysia ranks on the 5th place. So compared to the previous year, Malaysia was on the 4th. On the other hand, for the figure without precious metals, the so-called business cycle view, it shows that Malaysia ranks fourth after Singapore, Vietnam, and Thailand. Both directions show a decline for trade, including precious metals, with a drop much stronger on the Swiss exports to Malaysia. Analyzing Malaysia's figures without precious metals, trade has actually increased in both directions. Next slide, please. So if you break down the bilateral trade between Switzerland and Malaysia, we can see that, as I have mentioned already, exports to Malaysia dropped by 16% and imports from Malaysia by 1%. Despite this, Switzerland continues to maintain a trade surplus with Malaysia. The decline of total trade was largely due to the reduced export of precious metals from Switzerland to Malaysia. As you can see, precious metals continue to take the biggest share of exports at about 40%, followed by pharmaceutical products and machinery. The top sectors have registered a decline in the backdrop of the slowdown in the economy in 2020, except for pharmaceutical products. In general, the expert group expects that growing global demand is set to boost exports. Next slide, please. So we would probably all agree that the pandemic continues to set the tone, but positive developments are at the horizon, although uncertainties remain. So many thanks for your attention. Now we are all looking forward to the Malaysian economic outlook and Anthony's projection and analysis. Thank you.
Thanks a lot, Werner. Very interesting. Before we continue with Dr. Anthony Das, maybe one logistical remark. I am sure there will be a number of questions from all of you, either to what we just have heard from Werner Badel and or what we're going to hear from our next speaker. We reserved enough time for this at the end of the presentations, and we're going to use the Q&A, the question and answer function of Zoom. You can find the Q&A button at the bottom of your screen, probably. Please raise your questions anytime in there, and then later we'll read out them to the speakers and answer them for the whole planet. Now, without further delay, let me introduce you to Dr. Anthony Das, the Group Chief Economist and Head of Research from AmBank. Dr. Das is with AmBank Group since June 2013. He started his career as an economist at Bank Negara Malaysia, worked in stockbroking firms thereafter, and involves with various ministries and government agencies. He has 30 years of working experience and is seconded to EAC, the Economic Planning Unit. Dr. Das holds a PhD in Economics and Finance of the University of Bristol, UK, and a Bachelor in Economics from the International Islamic University in Malaysia. Welcome, and the stage is yours, Dr. Das. Always a pleasure to have you here for this yearly Economic Outlook. Thank you, Dr. Das.
Good afternoon, and first and foremost, I must say thank you very much on behalf of AmBank for inviting me again. And you can just call me Anthony or Das. Okay, we'll keep it very informal. And feel free to ask me any questions along the line too. And right, if we can just start with the first slide. Just a quick recap. If you look at the first slide, I mean the following slide. Now we are moving from the great lockdown to a great rebound. Just a quick recap about 2020. It's a Chinese, because I was using these slides a little bit for the Feng Shui talk. So I thought, okay, I'll use that and then just modify a little bit. In fact, last year we thought would have been a good year. And it's a year of red for the Chinese, and we always thought it was a new beginning. And things actually started off quite well until such time that by the month of March, things took a U-turn. If we move to the next slide. What has happened here is that the initial stages, my initial projections, if you just look at these charts there, I was actually looking at the global GDP around 3.3 and Malaysia about 4.5%. At a point of time, yes, I took into consideration of the US election. I was also concerned about the trade tension, the Brexit, and etc. But although the noises of this COVID did emerge sometime in December, but least did I thought it would be this bad. So I just brushed it aside, thinking that it can be so well contained within China itself. But when we started the year, it was briefly the US-Iran tension. But the good thing was that there was no major impact to the global oil prices or anything. It was such a brief one and it was over. The only jittery that I noticed was over the global markets itself. But then by the time came month of March 11, when COVID was declared as a pandemic, it caused a major chaos. At that point in time, because of the disruption resulting from the unprecedented measures where you disrupted the supply chain, almost instantly the demand, almost instantly you flat up the unemployment rate. It was something that was so peculiar, where both the supply side and the demand side collapsed almost instantly within 2 to 3 weeks. So at that point of time, the month of March, coming towards April, when I started revisiting my numbers, I was looking at a global recession turning out to be somewhere between -7 to -9 kind of levels. And Malaysia's contraction is going to be worse off than the 97 Asian financial crisis. At that time was -7.4. I was looking at something like between -8 to -10. That was the month of April. But a good thing was that by the month of May, when we started seeing the relaxation, the easing of the restrictive measures, very coordinated global stimulus policies came into the picture, and both in the fiscal side, monetary side, and the non-monetary side, primarily targeting on the livelihoods and also the businesses. So what I saw is that when it came to the month of May, trade started picking up. So when trade started picking up, I started seeing a bit of a life coming into Malaysia. So as a result of that, if you notice, the chart at the bottom, there's a quarterly GDP, the -17.1 could have actually been worse off if the government had continued the MCO 1.0, the April style of last year, all the way into the month of May and June. I was looking at more of between -25 to -30. But because of that easing of the policies here, the contraction dropped, and we started seeing pickup in business activities in the third quarter itself, and the contraction dropped further. However, in the fourth quarter of last year, what happened was the numbers picked up again. So we started having a little bit of what I call restrictive measures. And to make matters worse was the political noise, because the budget came in. There was so much of noise that there's going to be a change of government, a change of prime minister, a snap general election. So that noise was just superseding everything else. Over and above that, when the budget was unveiled in the month of October last year, there was a lot of tension that was going on that the budget would not go through. And if the budget does not go through, the prime minister will step down, the cabinet steps down, and therefore we'll have a new cabinet in the picture. So with those kind of noises, then eventually what happened, the pressure on business expansion, I saw capital expansion did not take place. Everything was slowing down, consumer spending was slowing down. And as a result, the contraction was about -3.5. But the good thing that I must say is that globally, because all of us worked well this time compared to the 2008 global financial crisis, we kind of really avoided a 1930s kind of Great Depression. So that's a very good sign that I must say. So when we are starting 2021, if you move to the next slide, please. So if you look at the next slide, these are some of the key numbers that I just want to flash it out here on the 2020 side. You can see the services sector, which plays such a very important role for Malaysia, got hit all the way down in negative. It was not just Malaysia alone. The whole world is the first time since I started work, I'm seeing both manufacturing and services contracting same time. Usually it's either or, but usually it's most of the time a recession is more of the manufacturing side. But this is the first time I'm seeing both services and construction down. Now, if you look at the second chart there, that's a manufacturing PMI, that is the Purchasing Managers Index. Anything below the 50 mark is a contraction. So you can see Malaysia's manufacturing side was already struggling in 2019 in one way. So we are just below that 50 line here. But then again, the services was holding up well. And a good thing is that exports are slowly picking up, but it's largely supported by the commodity related sector and also on the E&E side. And on the equities, yes, we have been 3 years of net foreign outflow. That means it's been net selling. But what happened is that it's not so alarming for me because there's more appetite by the foreign buyers towards the Malaysian bond papers. Ringgit kind of held on quite well last year. Net off, it gained by about 1.7% against the dollar. Now let's come into 2021. Can we move to the next slide, please? If we move to the next slide, okay, this is going to be a year of economic reconstruction. The challenge now is that, okay, we are all talking about a rebound. Fair enough. It is quite logical to say there's going to be a fantastic rebound because we are comparing on a very low base numbers. That means a huge contraction of last year. So as a contraction factor, so we are going to see a rebound. But more importantly now, following my engagement with businesses and so on, as opposed to trying to focus so much on a strong recovery or a strong GDP number, the focus now is more towards sustainability of growth, sustainability of business. It's a new wave. The COVID has actually pushed or rather expedite quite a lot of things that it has been there before. It is not a new thing, but it has been there, things like ESG and so on. So these are the things that's the new game, and we are trying to push towards that direction. And if you move to the next slide, in terms of 2021, the first highlight I would like to put here is on the political side here. So fair enough, came early part of January, we had the MCO 2.0. There was a lot of debate before that, what kind of MCO we wanted to have. Should we have the kind somewhat similar to the one that we introduced last year? That's what we call MCO 1.0. If we were to introduce such kind of numbers, I mean the kind of MCO 1.0, I think this time it's going to be extremely painful for the country in the sense that we'll be losing about 60-70 billion kind of revenue easily. And the challenge now is that should we go back to that or should we have a more relaxed one? So this was when my discussion with some of the ministries, I told them that this pandemic is a pandemic. It is something we cannot zeroize by even having a 2 weeks of lockdown or 4 weeks of lockdown. But we need to get the business going. So the business part has to go. So we took a more softer tone on the MCO, what we call it as 2.0. Now, given that in picture, followed by the state of emergency. Now, the state of emergency was introduced when it was announced. I think many thought the army is going to take over the government and all kinds of stories was going on. But in actual fact, people chose to read the word state of emergency and not read the details. Not everybody, but quite a number of them. But in actual fact, we decided to have the SOE is mainly because to control the COVID pandemic here. You must remember that we have 32 million people and we have about 2 million registered foreign workers. And we have about, I don't know, some are saying 5 million, some are saying 3 million. Let's say a range of 3 to 5 million of the non-registered foreign workers. So we may be able to address the Malaysians, the registered foreign workers, but what about the non-registered? So the spread can still be there. So given this whole thing, the SOE came into the picture. The good thing about the SOE is that one, it has toned off the noises of political issues. So following which, initially, yes, there was a lot of setback, a lot of concern and worry, I must say that. But thereafter, what I'm seeing today is that businesses are talking about capital expansion. We're slowly starting to see business loans picking up. There's gradual appetite coming back. So as opposed to prior to this, where we thought that the SOE is going to be so negative that nobody is going to expand, including the Malaysian businesses. But actually, interestingly, I must tell you that it is working well for us, for the government itself. So it has cooled off quite a lot. But now the challenge is going to be after August 1st. Are we going to continue or not? Will there be a GE or not? No. My take would be just this. If you look at point 2 and point 3, it's all about the vaccine story here. So in the vaccine story here, if you notice, this whole thing is that we are talking about 70–80% going to be vaccinated by first quarter of next year. So at any one time between now and then, if we were to have a general election, I would use the Sabah state election as the basis. Then the numbers can actually pick up, the cases can actually pick up. So how are you going to have this campaigning and so on and so forth? So my take would be probably the election would be more of next year. This year, we should actually be focusing quite a lot on trying to bring back the economy, create more job opportunities and so on. So, and whoever wins this next general election, if it is going to be a victory with just a 5-seat victory or 7-seat victory, we are going back to the same situation of square one. There's a bit of noises will come back. But we hope that whoever wins this time gets into a bigger victory so that you just ease off the whole thing. And we think that there could be a chance of a bigger victory coming based on some of the foreign political analysts and also some of the local analysts itself. But again, it's a bit too premature to say a lot of things here. So the noise of the political is still there, but it has settled off a lot because of the SOE, but it can come back after August. So this is something you got to be a bit mindful. Vaccine is going on as per normal. Then the other part that we are seeing is that if you look at the policy stimulus here, if you look at the interest rates, I don't foresee Bank Negara at any one time going to raise interest rates this year, nor are they going to cut rates as at this point in time. Any cut is in interest rate will only happen should the global economy take a dip. Okay, as at this point, with the vaccine, the deployment of the vaccine everywhere, and we are seeing numbers from US, from China, from Europe, and everywhere, it's gradually improving. So it kind of gives us a lot of comfort to probably hold the interest rate at 1.75% this year itself. And in terms of government measures here, yes, it's a total of 340 billion in terms of stimulus measures, but the direct fiscal injection from the government is only 55 billion. And I expect more and more of those direct fiscal injection to start rolling out sometime in the second quarter or third quarter of this year itself. So that should give us a bit of a buffer in terms of the growth part. Then comes the taper tantrum. Now, the taper tantrum is something that we have already priced in right from the start of this year itself. And with Trump, with Biden in the picture today, and with 1.9 trillion, because I already priced in the 1.9 trillion should go through, and now it has gone through. With that coming to the picture, numbers in US are gradually picking up, and that would mean that the Fed cannot hold too long to say that it's going to maintain the current situation, just like 2013. So I'm looking at as early as June, probably the Fed will start talking about a taper tantrum kind of story. Now, if that happens, rightfully, I would think that our bond yields, Malaysia's 10-year bond yields can even touch 4%. As at now, I'm looking at about 380 kind of level, can go to 4, and the ringgit could weaken a little bit more to about maybe 420 kind of level before it settles back down. So that's where the taper tantrum will only be affecting on the bond market and also on the, the ringgit, but not so much on the equities here. One more part that we would want to, I've kind of been focusing quite a lot would be on the bank provisioning. You see, as at this point in time, because of the moratorium and also we have this targeted kind of repayment subsidies, we call it, it has kind of contained the delinquencies and insolvency. But the moment this number starts to, when these incentives are being rolled back, then there would be some pressure coming to the picture. So the only way to avoid this is to try to get the businesses growing. But do not be too alarmed if you read in the papers going forward, maybe not now, 6 months down the road or 1 year down the road, if you find about 20% of the SMEs going bust, that has got nothing to do with all this, because this 20% is what I call them as zombie companies. Whichever way they are going to go down under, whether there's a COVID or no COVID. In fact, last year, even before pricing in, before the COVID came into the picture, we've already took into account about as high as 30% of SMEs will go down under. So these 30% are still surviving because of all these incentives given, so they are just there. So you do not get too alarmed if you do come across such kind of numbers rising. They are supposed to go. Okay, they're not supposed to be there. So that's the way it's going to be. And if you go to the next slide, then please. What happens here is that if you look at the global segments, it's that for this year, I'm looking at a global GDP of about 5%. Malaysia should be growing somewhere close to about 6% kind of level. Okay, easily 6 kind of level I'm seeing, because we are already benefiting a little bit from the Chinese recovery of about 8%, our largest trading partner, and that would be followed by US is also expected to pick up and Euro coming to the picture. So I think generally we are in a good footing in the sense that already we are seeing trade numbers are coming up. Okay, primarily from the semiconductor side, the commodity related side here. And also if you look at the commodity prices are holding up very well, it's kind of really helping Malaysia in that sense here. And over and above that, fair enough, last year we had a horrible year in terms of the FDI flows, but this year I expect the FDI numbers to start improving because from the information that I've got thus far, the appetite towards Malaysia has picked up and the approval rates are coming up. So these are things that once we start translating 21, 22, the numbers should actually pick up even better. So that is also going to translate in terms of growth. It's not just a manufacturing side itself, I think also on the services side. And if you move to and one thing about this slide I would like to see is that if you look at the bar chart, I mean the tables there, very interestingly, I just looked at the Chinese zodiac. I was forced to look into this feng shui thing. If you notice this whole thing, every time when we come to the year of fire, see 96, 97, the element is fire, the economy peaks. 98, Asian financial crisis. 2006, 2007, the element is fire. 2008, global financial crisis. Okay, it started off in 2007, but got really huge in 2008 and the world went into a recession in 2009. And the same thing if you look now, we are coming to the COVID era. Okay, so it's all coming all the way down. So where is my next peak going to be if I'm going to position myself from a business angle or even from a policy angle? The next economic cycle peak would be 2026 and 2027. That's the fire element. So it's a kind of cycle coincides with the economic cycle itself. So what's happening now is that whenever it comes to the period of this earth kind of things or whatever, metal, earth and all, you're always seeing a downturn. So this year is a metal, so it's going to pick up, then eventually it should be a rebounding. But going forward next year, you got to be very mindful that we have postponed the debt crisis. We have postponed a financial crisis. A debt crisis supposed to have happened last year has been postponed. So what I'm trying to say here is that as we are moving forward, we in Malaysia also, we are very mindful at the political side, I mean the policy side here. We are also taking into account of, because most countries in the world have already expanded their fiscal position, how are we going to work around, should there be another round of a debt crisis or should there be a financial crisis here? So these are things that is already at the back of our mind. So it will not be a such smooth sailing going forward. The trajectory is upwards, but it's going to be a choppy upwards here. And if you look at the next slide then, and if you look at the next slide, these are the forecasts that I have here for 21 and 22. You can see that on the interest rate for this year, I'm still looking at 175. I expect rates to start going up only next year. And inflation-wise, this year, I'm looking at about 1.8%. That's because of a negative 0.9 of last year. It's a low base effect. The nice part here, I must say, is that the palm oil, easily we are looking at about $3,000 per ton this year and stabilizing around 2.8. Oil price, we are looking at about 58.60. Gold and all the way down. And if you look at ringgit, I'm looking at an end period of about 406. Eventually, I'm expecting ringgit to strengthen. average wise also to be around 409. The reason being is that I'm expecting more liquidity or the funds to move into the Asian region, and Malaysia will be one of the beneficiaries here. So, and if we move to the next slide, the following slide, then the question now is that everyone are talking about is that if 2022 comes back to the level of 2019, does that mean that it's all back to normal? Is the economy back to normal? Are businesses back to normal? My take here is that first and foremost, we must remember that yes, there are some businesses who really benefited from this COVID, like the glove players in Malaysia, the pharmaceutical players, especially the glove players. So they have gone over and above their capacity. Okay, and then we have majority are way below. So whatever the recovery that I'm seeing now from the business perspective, it is nowhere near 2019 levels as at this point. So if I use the basis of April last year when we had the shutdown, the MCO 2.0 as my basis, and now where they are, they've only come up to about 40%, 50%. Some are still struggling at about 30%. Some have gone up to about 70, 80%. Some have gone to 100% itself. So what I'm trying to say here is that this recovery that we are enjoying today is driven by a huge stimulus package. And that has resulted to the flaring up of the global debt. Now it's at 365% of the GDP itself. And with this kind of liquidity in the system, the question now is that what happens if all the central banks starts to roll back, especially the developing Asian side? Let's say China starts to roll back its monetary policy, gradually starts to tighten the liquidity, which we already started seeing in the January this year before Chinese New Year. They started rolling back and the repo rate spiked up. So there's a kind of indication that they could start tightening the liquidity situation over there. So if that starts to happen and an error from a central bank, any one of the central bank, if they were to move up a bit too fast in terms of rolling off the liquidity from the system, in an uneven recovery can cause a crisis again. So that's one part here. But more importantly is that if we are just going to talk about a speed of the recovery based on GDP number, yes, I have got this year, you see last year I kind of hit the negative 5.6, whereas this year my growth is 6 or 7. And you're just going back to the old traditional way of ramping up certain areas of businesses, and you're not talking about sustainability of growth. Trust me, this time around is totally different compared to 1987. It's totally two different platforms. And because this time around, the debts are way too high. And if we do not have the kind of sustainability of growth, I don't think many countries can actually survive. That includes Malaysia. So the new focus is all going back to sustainability, because we must be able to withstand another round of crisis. May not be a huge crisis like the pandemic today, but it could be coming from the global debt or even the liquidity crisis, when the money starts to go back to US in 2023, where we are expecting them to start raising interest rates here. So I think that's something we got to be a bit mindful here. And if we move to the next slide, these are the areas of business focus that we are actually focusing on for 2021 and 2022. And you can see from manufacturing all the way down, it's very interesting. Food processing to building materials. We are starting to see things here. One area we really want to push very fast is on the construction and infra. Why is that so? Is that the forward and backward multipliers are humongous. If you look at the backward multiplier these are all construction related companies. The multiplier at the net off is giving us is about 1.5. And the forward from the construction going towards the services and etc. is about 1.7. So these are areas we really want to move fast. And if you look at where we are focusing today, I think you have seen our blueprint on the digital. And this is nothing new about the digital, but it's only that the COVID has expedited the process of the digital factor here. And the other part is also that from this part here, we are seeing a lot of e-commerce trade coming into the picture. what we are seeing is that we could be seeing eventually a 50-50 kind of e-commerce kind of businesses coming in. Logistic and warehousing is a key area that we really want to push very fast. And I must say an area that we want to focus also is on agri-modernization. Because we realize that we want to go into modern farm kind of principle here. And this is something that I even had a discussion way back when Dr. Mahathir was the 7th Prime Minister. We kind of had a very good discussion, and he was very into this modern farm. We are also talking about renewable. Now, if you look at some of the other areas that we're looking at is automation. If you look at the way we want to move forward for Malaysia going forward, and in the sense of ensuring growth becomes sustainable in our reset policy. Now we are talking about recovery, and then we were talking about a reset and the 12th Malaysia plan, where I'm working on at the moment is on the reset plan, which is the conduit for the 12th Malaysia plan. We are very much focusing on digital, automation. We are looking at the new global landscape. That means that when we talk about the new global landscape, is new business opportunities, because we are trying to tap into this, reshoring of the SMEs and so on. The other one is extremely important for us now is sustainability. And in the sense that because Europe has really moved way ahead in terms of sustainability, ESG. So what we are trying to do is that we want to emulate. And I also realized that listed companies in Europe who comply to ESG garner 6 to 8% premium in their share price compared to a company that's not complied with ESG. So over here, we are also trying to move into that direction. Probably, in fact, in terms of financing, in fact, AmBank is already in that. We are trying to go more into ESG kind of financing more than anything else. So if the bank starts to do this way, and even at the Bursa, my conversation with the chairman of Bursa, that fundraising, capital raisings, and so on, we must encourage these people to move towards ESG. They have to come up with the game plan here. And along that line here, the essence is that, yes, we recognize for Malaysia to move up, as what World Bank said yesterday, that Malaysia will become a high-income nation in 5 years down the road. My question here would always be that by mathematical number, yes, we will achieve. But I think it's more important is to ensure sustainability of growth. We should not be racing to want to become a high-income nation when there's lack of sustainability, lack of inclusiveness. I think those are essence that can keep this momentum going forward. And this is where, again, in our reset plan there, we are focused so much the importance of human talent, because we realize we lack skilled people. We have been relying a lot on foreign workers on the low skill end, but not on the medium skill and the top and the higher levels. And also on the government and the public reforms and regulation, because I realize that the regulatory side can be a bit challenging at times here. Now, another sector that now we have identified post-COVID, due to the COVID, is the third sector. I call this as a third sector. These are the micro business guys. Okay, if you look at the SME, we've got about 70% of micro business, and these are the women and those neglected people. So we want to build up this sector, build up the micro business, become a feeder to the S, that's the small, and then to the medium, and then they become exporters. We want to create those kind of ecosystem out here. And the last one is going to be on the corporate sector itself. I think I will stop here and I'll start taking questions if you're ready.
Thanks a lot, Anthony. Very interesting presentation again. Very good outlook. I think we all know what we can expect for 2021 now.
Thank you very much.
We get a couple of questions in already, and I hand over to Pauline afterwards to moderate through the questions. Maybe just one question for me, just related to your last slides. Basically, you had a lot of industry you're focusing on. For me, the slide looked like it's just kind of every industry.
Yes.
Any industries that are left behind, or there is no focus, or basically industries that simply will not make it, kind of?
Okay, these are the industries actually from the banking side we are focusing quite a lot in terms of financing. Okay, this is from the banking perspective. So among all these things here, if you really want to pick and choose, as I said, now going forward from the government side, it's going to be everything relating to digital automation. So these are going to be the two essence that you have to look at it. And the third most important is it can be any manufacturing, any services, whatever, but has to be tied down to ESG. So this is where the pathway that we have created now. So the top two is going to be digital and automation. And then it comes with all sustainability related. So that is at the government side we're looking at. What I've given you here, this is from the bank's perspective for financing, where we are very, very comfortable with for the next 2 years.
And thanks a lot.
Right.
Hi, Anthony.
Hi.
So Pauline here, we have 3 questions. The first question is from Andre. What is the outlook of Malaysia and Swiss franc and Malaysia USD exchange for this year?
Okay, Malaysia USD exchange for this year, the end period, if I'm not mistaken, is 4.06. Okay, the first half is going to be a situation where you're going to see the dollar strengthening, ringgit weakening. So it will go to about 4.15. It may even go as low as or as high as 4.20. Okay, it can. But thereafter, I expect the ringgit to start strengthening because the fund flows should be coming back to this region. And all this tapering story and all these things, I think we would have priced in quite a lot. Recovery, good growth numbers in the region should benefit Malaysia. And where will the money be coming in more that will benefit ringgit is going to come in through the MGS. So on that note, we should be closing at about 4.06 in terms of end period. Average wise, it's about 409. But again, it's back to there's a caveat here, short caveat. That's the political situation on Malaysian side. Okay, so that's where it is.
What about Malaysia to Swiss franc? Would you have any numbers there?
I don't have at the moment. I'll get back to you on that.
Okay.
You should have told me I haven't done one.
All right. Okay, noted. Thank you. So the next question is from Ms. Agnes Yao. What are the advantages of a developed high-income country as compared to a developing and mid-income country?
Okay, you see, first thing is when you say you're a high-income country, that means your GDP is at certain range, and supposedly your standard of living is supposed to be at certain levels and so on. But that's at the aggregate macro level. But does that translate all the way down? So that's where the debate comes. Okay. Yes, everyone wants to become a high-income country. Then again, you achieve at the macro level in terms of your per capita GDP and whatever not under the sun. But beneath the whole thing, you still have high levels of poverty. Inclusiveness is not there. And you see a lot of other shortcomings here. Businesses may not be growing at a very sustainable pace. So I think we should move away from trying to race to become a high-income country, high-income nation, to a country that, yes, we must aspire to become a high-income nation. But while aspiring to become a high-income nation, it is very important to create that sustainability. If you recall those days, we wanted to become the tigers, the 4 tigers. Initially, we had Singapore, Hong Kong, Taiwan, and South Korea as the tigers. And then we were all racing to become, we wanted to be the next 4 tigers as Malaysia, Indonesia, Thailand, and Philippines. Yeah. And then we got hit by the Asian financial crisis. And we didn't know what to do after that. We all got lost in our direction. So then after that, we came out with the Vision 2020, ended last year. Then we had the MSC corridor, ended last year. So we have got 2 big master plan policies came on. We have yet to take stock about how much we have achieved out of it. And what have we not achieved? What has gone wrong? We have not taken stock of that. We have got nice plans coming up. So I would think that we need plan. Yes, we must take stock of what we have done, what we have gone wrong. And more importantly, this COVID crisis, compared to even the 2008 global financial crisis, the COVID crisis has opened the door has opened the minds of everybody in the sense that people are finding new ways of doing business, new way of trying to survive. Okay, so they are becoming very innovative. Even a micro business person on the street is trying to become innovative. So when we have this, these are good stories, but then again, the sustainability going forward, it's all about now sustainability of the situation. So when we start talking about sustainability of growth, that means your growth numbers may not be high. Technically, you won't be seeing 6% growth, 7% growth. Only this 1 year, you will see 5 to 6%. Say even Malaysia might even hit 6.5%. No issues, okay? But subsequently, you could be growing at about 4%. But if you are very stable, another headwind comes, you're able to withstand, even if you're not in a high income nation. So by the time you get into a high income nation, you would be far more better off. So I think over the next 5 years, yes, it is a situational play. We may reach the number, but I think more important, the foundation has to be very strong. That means the sustainability part. So coming back to your question, the advantage and disadvantage, it's all about just mathematical numbers, quality of lifestyle, and so on and so forth, those things. And logically, you will find you'll attract different kind of businesses also.
Okay, thank you very much, Anthony. Michelle, would you want to contribute, to this question as well?
Okay, we have some questions from our members. Julien Buzenac is asking Anthony about the situation of the aerospace sector in Malaysia.
Mm-hmm.
And what is your vision? We see in your forecast that you're planning to for Arab Malaysian, you put it in 2022. So what could you advise us?
Okay, aviation sector is going to be a bit of a challenge at the moment. As far as from our engagement with our aviation guys here in Malaysia, they are looking at more of second half of 2022 to bounce back. I mean, to come back. That means, including the tourism side, all these areas are going to be second half of 2022, but more comfortably, I would say it's going to be 2023. So what will happen is that between now to the whole of this year, we are not going to see much excitement. As long as these businesses can survive and rethink of their business strategy, I think that is going to be really good. But more importantly would be next year, by the time, you see, by the first half of next year, I would have assumed that most of the people on planet Earth would have been vaccinated and things should be holding on quite well. And that will give a lot of comfort and confidence for this industry to come back. And the survival of this industry, it's again back to the vaccine, because there's still this issue of this vaccine, whether we have to take it repeatedly, the effectiveness. The effectiveness is the most important thing here now on this vaccine. So aviation, nutshell, 2021 is still going to be a bit cautious. 2022, we will start seeing the light. And 2023, it should be even much better.
Thank you, Anthony. We have another question from another of our members, Olivier. It's about, we know that the Malaysian government has been spending a lot on support for the community, for the people. Mm-hmm. And is the capacity of the government still there to continue in parallel to the support of the people, to also invest in large programs at the same time?
Okay, if you're talking about the fiscal space, Malaysia, we don't have much already. We have come almost to the wall. So that's why we are trying to find, if you notice the 340 billion support, I mean the stimulus measures, direct support from the government is only 55 billion. The others are all indirect through moratorium, withdrawal from your pension funds and etc. That's where the money has been coming from. So what we are trying to do is that we know, and then the debt ceiling, we raised it from 55% to 60% of the GDP here. We cannot go on doing this, to be very honest, and the government knows that, and we realize that we can only survive this way for another 2 years. So the very important thing now, the Prime Minister himself, is that his concern is the job creation and creation of business activities. So to your question, the answer is we are actually at some form of a threshold. Okay, we have a little bit of space, but not much. Little bit of space on the fiscal side, and it's only the non-fiscal side that we are still using. That means go back to the extension of the moratorium and the likes of it. But more importantly now is that this kind of support will keep hold for a while, but very important is to create jobs. That means we have to create the business activity. But you must remember that Malaysia is a trading nation. We are very export driven, okay, or rather export dependent. So it's a good thing that if the world starts to pick up, US, Euro, China starts to pick up, our trading partners starts to pick up, then we can start seeing things moving. So along that line, you will also be seeing a shift of businesses. That means from the old traditional to new waves of business, digitalization, automation, maybe healthcare. You see, there's a new wave of things people are talking about healthcare. Those are the new areas of businesses.
Okay. Pauline, you take over.
Okay, yes, thank you very much, Michelle. We have 2 questions from Andre, Anthony. The first question is there still any plans for a third Malaysian car? And the second question is, will AirAsia be able to survive? Will the government have to bail them out? Yes.
Wow. A very naughty question. Okay, on the third Malaysian car. Unless Mahathir comes back as the Prime Minister, then we'll start talking about the third Malaysian car. I think as at this point, no one seems to be talking about the third Malaysian car. Everyone are too busy with how to come out from this COVID pandemic and the businesses to get going. But one thing I must say is that going forward, we recognize the importance of electric vehicles. You can't run away from it. Okay, so that's the way forward it's going to be. So if I go by that analogy and recognizing the fact of the importance of the EV, logically, I won't be surprised that not today, maybe not this year, maybe next year or year after, there could be a situation of a EV-related kind of car, third car coming out from Malaysia. It can happen because you can see the whole world is moving in that direction already. And Malaysia recognized that, and we are also trying to incentivize those kind of cars to come into Malaysia. Okay, so that's the part there. On the AirAsia side, as at this point, I think bailout, I'm not too sure yet. I think we still have to wait and see because it's a tricky situation. That's why we are trying to open up at least domestic tourism or friendly party countries. If we can start opening up things and they can start flying, then it eases off the burden of both sides here. Okay, so that's how I would see. Bailing out would be something or probably on the worst case situation here. Then again, we have mass on the other side also. So would that be a merger? I don't know, because there was supposed to be a merger in the past. Then it just died off. So rather than bailing out one person, maybe there could be a merger at the end of the day. And then you form a new co, or you get a new investor to come in or something like that. So that's how I will see AirAsia. As at this point, probably nothing much there.
Okay, thank you very much. Another question from Hugo Perlestein. do you expect the recently signed RCEP to help the Malaysian economy to rebound in 2022?
Okay, the RCEP is good in many ways. I would say that it has opened up some of them are already our trading partners. So, but it just gives the additional booster out, and rightfully it should benefit Malaysia around 22, 23 kind of level. Yes. So along that line also with RCEP, what will happen is that those companies that are less competent in Malaysia, if they don't pull up their sleeves, then they won't be on the radar screen. So this is where I was telling you just now, the 20 to 30% zombie companies, you could just see them fizzling off from this. But RCEP is definitely positive.
All right, thank you. I think that is our last question. So I pass it back to our, chair, Michael.
Thank you, Pauline, for leading us through the Q&A session. And almost in time, we think we can wrap up this session. Thanks a lot again, Anthony, for this very interesting presentation. Thanks a lot for the Swiss Embassy for also giving us an update on the Swiss economic situation. Thank you, Michelle. Thank you, Jordi, for your support. Happy to have another event with you guys soon. Thanks for all the participation, and wish you everyone a great afternoon, and talk to you soon. Take care. Thanks, everyone.
Thank you very much. Thank you very much.
Yeah,
Bye.
thanks everyone.
Right.
Gracias. Thank you so much.
Right.
Thank you very much. Merci beaucoup.
Merci.
Swiss
Thank you.
exactitude. It's 4 o'clock sharp, 1 hour. Very good.
Very good. Always on time.
Space time. Okay.
Thank you very much, everybody. Thank you, Anthony.
Thank you.
Thank you.
Thank you very much
Yeah.
from my side. Have a good afternoon.
I hope it was very useful. Okay.
It was.
Yeah.
Thank you.
Yes, it is. It is.
Bye-bye.
Right.
Bye,
Bye.
everyone.
Bye.
Thank you. Bye.
Bye-bye. Bye.